All right. Happy Saturday, everybody. Anthony Special here with Traders Agency. Hope you're having a good weekend so far. Hope you're geared up for the balance of it. So I want to take a quick moment here, upload a video for you to YouTube. This is a video covering the major markets. So week to week, I look at these markets. I tell my students about them. We cover them, we go through them, we discuss them. Why do we do this? Well, it's simply because we need to recognize what is happening around us and how it may be affecting our positions. So with that being said, before we jump into the market, our risk disclaimer is in front of you here. Essentially says trading and investing involves risk. You should be well aware of those risks. We are not CTAs, which stands for Commodity Trading Advisors, meaning we cannot offer you unique or personal trading advice. If there's any questions about what you see in front of you regarding our risk disclaimer, please feel free to shoot us an email, support@tradersagency.com. With that being said, we will jump right in. Let me pop open the charts here and we'll get started. So I'm going to just maximize this on my screen so you can see it a little bit better. What you're looking at here is Dow Jones Industrials Futures Average. I want to zoom in a little bit. We don't need all this data. We're just going to look basically from 2001 to where we currently stand. So you can see here was the balance of the uptrend. This is where we started to flatten out, and this is where we turned. So we have tested recently an extremely important area. So this is the initial structure that formed the bear market, and we have failed at it. Not only have we failed at that, we failed at the 200-day moving average. So we're finding support currently at the 50-day. We have a slight amount of support right below it. There's not much to fall before we test it. And then we could fall below that to as low as 39.65 if we were to take the next leg down. Now, I look at this in two different manners. Here is your impulse, correction, impulse, and we take out these lows. Or this is your impulse, correction, and then we impulse higher and overcome these obstacles we have. So one or the other is going to transpire. I believe in the coming weeks, we're going to know which one of those two they are. And it will be very, very helpful for us as traders to navigate the market. Looking at the NASDAQ, also looks similar. So here's your top. Here's the formation. We popped out, but we failed relatively quickly. Finding support at the 50-day, failed at the 200. Again, is this a big impulse followed by a correction and an impulse lower? Or is this an impulse, a correction, and then an impulse higher? Coming weeks, we will have answers to those questions. And essentially, we're going to look for the answers to these questions on all of the major markets. Next up, S&P 500. Again, we failed at that initial downward structure, failed at the 200-day moving average, fell below what would have been support here as price action broke from it, finding support at the 50-day. For this week, if the 50-day does not hold, 38.75 is a realistic downside target for the S&P 500. The 50-day holds, will likely push back higher. So it's a matter of, again, kind of wait and see, and we're going to just play it one step at a time. Next up, Russell 2000. You can see again, we popped out, fought the 200, but essentially failed at it the following week. Finding support at this little channel structure here, formationed off the bottom. We have the 50-day to go, and then some support below that. So we're watching this closely. Again, these will be telling for us, whether this market goes higher from here or goes lower. Next up is going to be the gold market. Now, I realize many of you trade the gold market. This market's been sideways for quite some time. I shouldn't call it sideways. I more call it range bound, but we've had this downward motion. We've corrected, and we could potentially be impulsing. So this is setting up nicely, failing at the 50-day. Resistance above is holding, so we're looking to see this market drive down from here. Crude oil, looking for some support to come in from this area. We'll see if it pushes higher. On the continuous contract, we're below the 200-day. 50 is just approaching it. These two areas are acting as some form of resistance. So we're going to watch this carefully. Bitcoin, US dollar, market has impulse corrected, impulse consolidated, and looks like it's impulsing further to the downside. We have a downside target in the 15,000 handle. So that's what we're watching for this to transpire. Last but not least, This is the dollar index, which as the market has been exhibiting weakness, this has been exhibiting strength. So we had a good buy signal here. We had an impulse, a little correction, some consolidation, and now we are impulsing towards our target actively at 109.58. So with that, guys, I appreciate you taking your time to share a little bit of your Saturday with me. I want to share this with all of you so you had the opportunity to see what we do here at Traders Agency. This is essentially live data that is just closed out this past Friday. And if you'd like to learn more, visit us at tradersagency.com. We have a slew of classes and programs that could fit any and all trading styles, and we'd love to join you. So I run a class every Wednesday from 2 to 3 p.m. Eastern Standard Time. For as little as $5, you could become part of that program for one entire year, and I would love to have you join me. So with that, again, I wish you a beautiful and blessed weekend, and I will see you hopefully soon.